Welcome back to this very special edition of Investing with Confidence. Stop what you're doing and listen. That's what it said at the beginning. But we talk about the do's and the don'ts of the financial markets, the stock market, options, futures, Forex, cryptocurrency, whatever that flavor of the week is. Online Trading Academy, the sponsor of the show, teaches skills and techniques and how to get started if you're brand new or just getting in and protecting what you have. It's been a special show about protecting portfolios here today, but we have investing classes I gave away tickets to in the last segment. If you did miss that, you can text right now and get 2 tickets for an investing class locally here in Denver, Colorado, Bloomington, Minnesota, and Atlanta, Georgia. If you're in any one of these locations, text right now for tickets for the investing class. Also, a quick start kit that has some free stock picks. Text the word invest right now to the number 484848. That's invest to the number 484848. So, Al, we've been talking about, the reality of what's happening in these markets right now. People are struggling right now, and we talked about it, and I tried to paint a picture on the last segment about when people are not comfortable doing things, they don't do them.
You're correct.
And especially in retirement accounts, you can't afford to do nothing right now. You owe it to yourself to learn the skills and techniques and being able to live the life that you choose to do. But there's also huge opportunities no matter which way this market goes. So let's talk about real quick here what the opportunity is in a downward market, what that concept is. I want you to explain what it is, not in just real simple terms.
Right.
And then also what type of accounts you can use those in.
Right. Well, the word that Josh is looking for there is shorting. And that is something that everybody should learn about. It is a way of benefiting in a down market. Who uses it? Well, the hedge funds use it. The major firms like Goldman Sachs, J.P. Morgan use it.
And just real quick, though, the public can use it as well, but most people just don't know how.
Well, exactly.
That's why it's important for us to talk about and shed some light on this.
Yeah, and also I think you're going to find that even the Wall Street, the advisors are probably going to tell you can't do that or you shouldn't do it because they need you to need them.
Yeah.
And then they will put you in some, like I said before, like in a diversified portfolio, and that's supposedly how you're protected. But in a down market, those are some of the best opportunities that are available for people to benefit. Shorting is a way basically of selling something at a high price, buying it back at a low price, because basically you're borrowing something that you sell. You have to return it at some point. So you buy it high, you sell it low. It's the opposite of what they typically do, where you buy something hopefully low and sell it high.
To give an example of that, you're just opening a position. So an example, you open a position at $200, you close it at 100. That difference there is 100. So there's a $100 profit by opening it high first and then closing it low. So don't get confused by the terms. I teach a lot of these investing classes, and people look at me like I have two heads when I say this. Don't worry about that. It's because you can.
Yeah, and that's one way of benefiting in a down market. And there are other ways that might even be easier for you. There are option strategies that can be used that will be positive or potentially positive in a down market. So you can use options in addition to shorting. You can also use what we call inverse ETFs. An ETF is an exchange-traded fund, which is basically a basket of stocks. There's an ETF that mimics most of the pretty much everything in the financial world, but there's one as an example that mimics the S&P 500. And if the S&P goes up, say 10%, that ETF will be up maybe 10%. There's an inverse ETF that goes the opposite direction. So when the S&P's down 10%, you have an opportunity to be up close to 10%. That's another way of benefiting in a down market. So, and we talk about these in these classes. There are at least 3 ways for you to benefit in a down market. You can also use some of the assets that we'll be talking about here in a minute, like futures in the foreign exchange market. You can use those in a down market also to benefit. So there are a number of things you can do. You have access to pretty much everything that the pros do now. It's just they don't want you to know about that because then you don't need them.
Yeah.
And that's how they're going to survive.
It's almost that thing, do as I say, not as I do. They're doing the things that they're telling you not to do.
Well, that's
amazing.
exactly right.
That's why it's so imperative to learn the skills and techniques now, because we're seeing huge opportunities, and we have a couple opportunities right now. when the markets if the markets continue to go down, which it's looking like it is. I mean, who
Hmm.
knows? I don't have a crystal ball, but if that's possible, learn the skills and techniques to benefit as it goes down. It's called shorting. But also, what's another benefit or opportunity? When things start to come back up, because they say that it always goes up over time. Well, have the cash available at the bottom, so you're really buying low and selling high. So I mean, and also too, in these accounts that we're talking about, these different strategies, you can use options that will have a benefit in a down market with your retirement accounts, IRAs,
Right.
because you can't technically short a stock or an ETF in a qualified retirement plan, but options is how you do that.
Yeah.
So these opportunities are available in your retirement accounts, also available in your regular retail trading accounts. And we have investing classes to help people get started, to learn these concepts, learn what it is, what it means to short the market, opportunities to profit as markets go down. So text right now for 2 tickets for an investing class locally here in Denver, Bloomington, and Atlanta. Text the word invest to the number 484848 to learn these skills and concepts to benefit as markets go down. So, Al, with retirement accounts and oh gosh, and what's happening with the market, what do you think is a couple components? I guess the 2 most important things that people need to know to start protecting what they have.
Well, first of all, you have to know what you have and how it can be protected. It will depend on where that money is sitting. If you have a 401k, there's some limitations as to what you can do, but there are things you can do. And in these classes, we'll talk about that. If you have a self-directed IRA, where one of the great benefits there is that you're eliminating one of the things that sucks money out of your retirement
it's
account. And
that
that's
4-letter F word that we can say on the
we
radio.
can say it, and
It's
that's
fees.
fees. And as soon as possible, you want to try to eliminate those.
By the way, I think it's important. I just want to make sure our listeners realize this, that as markets are going down, they are still paying fees.
Well, as markets go down, you're paying fees, and as you're drawing money out to live on, you're paying fees. So as you're taking money out of your 401k, so is your advisor, your plan sponsor. So
Yeah.
there's double
2
dipping.
hands in the cookie jar.
Right. Yeah. So you want to eliminate that part of it as soon as possible. But the big one is, like, if you look at your retirement money as a bucket full of money, that little hole in the bottom, there's a hole drilled in it where the money is being sucked out. That's the fees.
Mm-hmm.
But what if the whole bottom of your bucket falls out and 50, 60% of what you have disappears?
Mm-hmm.
How can that happen? Can it happen? Well, it may be happening to some of you right now in a bear market.
Yeah.
So what we want to do is talk to you about how not to let that happen. And we talk in these classes about some of the fallacies that are out there that have maybe kept you from investing and trading on your own. People have a fear of something that they don't know. So we want to try to, kind of pull back the curtain and show you how the markets function, how it can be simple to follow the people that are actually doing the work and moving the price of assets. And that's really the important thing. There are people out there that are putting tens of millions of dollars into research and data and high-speed equipment and hiring, the top people in the Harvard MBA programs. They're doing all the work for us. The great thing for us is we can show you how to just follow what they're doing because they show it to us on a price chart. So if people tell you, this is too much work, it takes too much time, you don't have enough money, you're not smart enough, come in and let us show you how those things are fallacies that are really perpetrated out there to keep your money, I should say, with somebody else who's getting paid to manage it. And they're getting paid to manage your money while it's being
Regardless.
Well, it's disappearing during this first quarter.
Yeah.
When you see a drawdown, it's not just the money that you're losing or your portfolio is losing to the market. It's also money that you're losing to management, which is not really providing much benefit during these drawdowns.
Yeah, I want to talk about in the next segment, Al, about the mindset and how to really help people become comfortable in these markets, because I think you brought up a great point there. But I think it's key, as you were talking about, to understand how the markets actually function. You got to find out who's moving the market. the institutions, the big money, they move the market. We cannot move the market. It takes billions of dollars
Right,
to do that.
right.
So what do we want to do as the public is trade like them. So what do you have to do? You got to find out what they're doing. You got to understand a strategy to identify where these institutions are buying, but also selling. An Online Trading Academy has a core strategy that's designed to teach you to do that, to teach you to follow those institutions and make smart investing decisions. To get introduced to that, we have investing classes for people to get started if you're brand new to the markets or you just have money in the market. Call right now for 2 tickets for an investing class here in Denver, Bloomington, and Atlanta. Call 888-682-6466 for 2 tickets for an investing class of 2 hours, 888-682-6466, or text the word invest to the number 484848. As I mentioned, Al, coming up next, we're going to talk about the mindset and how to help people become more comfortable, but also confident making their own decisions. This is Josh and Al, Investing with Confidence.